hot on the heels of former Biden Currency Comptroller nominee Saule Omarova's exhibited thirst to follow China towards a government-issued, government-controlled digital so-called currency, Senator Liz Warren, the Democrat from Massachusetts, has put aside her tomahawk and Indian war paint long enough to pick up the Omarova baton. Hi everyone, I'm Gardner Goldsmith for MRC-TV. You knew it was coming. Liz Warren is touting the glorious future of a United States where the central government / banking nexus not only will issue the currency, hand it to the specially connected, and then see its inflation of the money supply bid up prices by the time you get that cash, but also a future USSA, where the so-called money will be digital, always traceable by the feds, and open to deletion if you don't spend it, and many other wonderful God of the state traits. In a chat with Warren-friendly NBC News host Chuck Todd, Squaw Liz exuded condescension for us lowbrows. She showed off her adoration of the state regulating what should be private exchanges between willing participants, and she displayed her toweringly conceited avoidance of the root of economic booms and busts, which is state political influence of the money supply and financial sectors of the economy. And by the way, check out how she pushes this increase. It's classic rhetoric.
So a lot that banks do wrong, if you think we could improve that in a digital world, the answer is sure you could. But in that case, let's do a central bank digital currency.
Okay, notice how she blames the banks for doing wrong and how she uses the collectivist forced inclusion we as if she helped found a bank or investment company, when in fact anything the government creates is done through tax theft, force, and the claim of power, not through private voluntary investment. That is pretty audacious. Yeah, to deflect away from government and at the same time imply that the government-forced we is the answer to what she, a government shill, claims are problems? Amazing. And of course, part of her answer is a government-licensed, central bank-issued digital currency.
Are you there?
Oh, for a central bank digital currency? Yeah. Yes. I think it's time for us to move.
So essentially, because
us. Isn't it great to be included in her plans?
Do you think we're at a point where the toothpaste is so out of the tube on Bitcoin as a digital gold, to simplify the conversation here, that whether you accept the premise or not, it's probably going to end up getting regulated at a minimum like a commodity?
So I think it's going to end up getting regulated.
Let's pause to reflect here. Politicians are infamous for using the passive voice rather than the active voice. Thus, even when they're the ones making the mistake, they'll say something like, mistakes were made. Made by whom? And here we see Warren speaking with just that kind of forked-tongued jawboning about the government regulating Bitcoin. But she uses the passive voice to imply that said regulation, otherwise known as claims of government power to snoop, extort, and shut down, that they're just going to happen, like weather events.
You know, anytime you talk about the toothpaste being too far out of the tube, I always remember how many people said to me in 2006, 2007, 2008, toothpaste is out of the tube on subprime mortgages and derivatives because billions and billions of dollars were flowing through the system. And then once it blew up the entire economic system, all of a sudden the folks in Congress got religion and said, whoa, on some of this we need to put real regulation in place, and on some of it we just flat need to make it illegal.
But virtually anyone familiar with the subprime financial crisis of 2007, which was not isolated to the subprime mortgage sector and extended into 2008, 2009, 2010, and 2011 knows that even the label subprime mortgage financial crisis is a term designed to deflect. The economic troubles to which she refers have roots going back much further in time than 2007 and going much deeper than the subprime mortgage market. They stem from government policy and Federal Reserve control of both the money supply and interest rates. The Ludwig von Mises Institute has a wealth of information on the topics of central banking, inflation, government-backed loans creating moral hazards, i.e., inspiring reckless behavior on the part of those institutions that no longer carry their own private risks. So check it out. But for the sake of concision, allow me to refer you to an excellent 2011 BizPac review piece by John R. Smith, who traces the real source of the so-called housing and larger economic problems that Warren blames on pretty much everyone but the people who really are at fault. As Smith notes, quote, "The root cause of the 2007, etc. housing disaster occurred after the federal government gave the green light and bullied lenders onto an 8-lane highway toward making money available to all comers for home mortgages." Here's the true and fascinating story of how that started. Now, I'm going to offer key portions here, but I recommend his entire piece. Check it out. It's excellent. President Jimmy Carter sponsored the well-meaning Community Reinvestment Act, CRA, in 1977. It required banks and savings and loans to offer credit to underserved populations so they could obtain credit, including home ownership, end quote. Because, that so-called power to do that is right there in Article 8000 of the Constitution. Then, in the late 1980s, the unconstitutional Federal Deposit Insurance Corporation, FDIC, increased its insurance for bank deposits, thus inspiring banks to be less vigilant about their loans and, in turn, handing out mortgages to many people who could not afford them, causing an early 1990s collapse in mortgage payments and causing massive defaults. The answer from government? Well, of course, more government. Quote, in 1991, the Home Mortgage Disclosure Act required lenders to report rejection rates by race. Lenders were informed that their loans would be examined for evidence of bias. Violators would face fines, get this, as high as $500,000. The Democratic Congress in 1992 passed the Federal Housing Enterprise Act, providing HUD, yeah, there's a constitutional item right there, nice agency, providing HUD the hammer to carry out congressional intent to meet the mortgage credit needs of all potential home buyers, including those with low and moderate incomes, end quote. We don't have the money. Have the house anyway, it's totally fine, works. Mix that with FDR-era creation of Fannie Mae and the Johnson-era creation Freddie Mac, which are government-generated, government-backed corporations given virtually free rein to act as eager consumers of mortgage-backed securities sold by banks, and you have a very dangerous mix that just keeps getting more hazardous. Quote, the 1992 Federal Housing Enterprise Act was the fuse that lit the largest housing blow-up the U.S. has ever seen because one provision required that mortgage giants Fannie and Freddie should accept down payments of 5% or less, ignore impaired credit if the block was over 1 year old, and otherwise loosen their lending guidelines, end quote. That also was the time when the Clinton so-called Justice Department targeted local and regional banks if they didn't lend a Clinton-approved level of mortgages to underserved people in certain regions. Those would be folks who, in a normal market, didn't have the income to get properly functioning home loans because they were too high risk. As Smith puts it, quote, The CRA, that's Carter's Community Reinvestment Act, was a club used to force banks to subsidize poor communities with close to $1 trillion in high-risk loans, end quote. And George W. Bush continued the practice, even as, starting in 2002, the Federal Reserve dropped the prime rate to near 0%, and lenders began trying to fill their government-mandated quota-like home mortgage goals by offering variable interest mortgages. Quote, it turned into a free-for-all of banks approving loans for people who clearly couldn't afford to repay them. By 1996, 42% of Fannie and Freddie's mortgage financing went to borrowers with below median income. This target increased in 2000 by 50% and was 52% by 2005, end quote. And when banks increased the interest rates of those variable rate loans, many recipients could no longer pay them. Curiously, Liz Warren didn't discuss any of that, nor did she discuss her participation in the housing market carrion fest when many of those properties went up for sale at bargain prices. But that's okay. She's got the answers to what she implies are other people's problems and errors. Just bow to the government.
That's the trick in the Bitcoin space and in the stable coin space, is that there's no real government regulation of this stuff.
The sooner people turn away from Warren's advice and prognostication, the better. Thank you so much for watching, everybody. Remember, please like and subscribe. Check us out at Rumble because they don't censor us. We'll see you online at MRCTV.org. We'll see you at TikTok and Instagram. We'll see you on YouTube as well. And we'll see you in Facebook. Please like and subscribe and tell others about these videos as well. And if you get a chance, go to the MRC Store. It's a great way to help the Media Research Center and to show off your support for MRC. For MRC TV. Oh, if you want to find me, I'm at Gard Goldsmith on Twitter and at Gardner Goldsmith on Gab. Thanks for watching. For MRC TV, I'm Gardner Goldsmith.